Is the problem here with the company? Is the problem across the sector? Is the problem the US consumer? Is it about reopening trades? What is it that's gone wrong here for Netflix?
Can I pick E, all of the above? I mean, because I do think it's a little bit of all of those things. It's clearly the streaming business is a hard business. I mean, it was easy when Netflix first got into it. They had first mover advantage, and they continued to spend a lot of money. But let's look at the competitive landscape. Disney is in there, HBO Max is in there, Peacock. I mean, you've got an amazing amount of dollars chasing talent. So they're chasing writers, they're chasing creative people, and they're all trying to come out, trying to do the same thing. And what Netflix has shown in the quarter before this and yesterday is that it's really hard, and they've made it very difficult to continue to dominate what they used to dominate, which was the streaming business.
Well, and how much too, Mark, is it an issue of just saturation and that everybody who is going to have a Netflix account already has one? Is this just a business that can continue to operate, just not at the growth that it once was able to enjoy?
It's certainly an issue. I think you bring up a really good point. It's definitely an issue, especially in the United States. But Netflix has said for years now that there are good opportunities outside. Some of the stumbles they've had, though, they've had to bring prices down in India, and some of the other parts of the country, the uptake hasn't been as good. They did have a little bit of a first mover advantage because Netflix was one of the first streaming services that actually went to to provide local programming. So shooting in India, shooting in the UK, and bringing local programming to those. But everybody's doing that. I mean, everybody is doing that right now, and so it makes it really difficult to differentiate yourself.
Yeah, and South Korea, notably as well, springs to my mind. Let me ask you, does this mean for the management team? What does it mean for Reed Hastings specifically, the company he co-founded in particular? Is he under more pressure now than he's ever been?
I think that's fair. I mean, but let's not forget what Reed Hastings did. I mean, to take Blockbuster, by the way, and turn it into Netflix is just amazing. So he did do a lot of things. I will have to say, though, that on the margin, I'm a little surprised. Netflix has continued. They're going to spend $17 billion on content. Their content has not resonated with consumers as much as it had. I think a lot of that is competition. Let's also take the sharing of passcodes. I mean, that was an obvious issue that until their business started to slow, they weren't really addressing. So could management, is management on the hot seat? Yeah, I think they are. And they finally talked. He talked a little bit yesterday on the call about offering ads, sort of lower price for ads.
Right.
Well, that's something they've been kicking around for a while. So in many respects, it's almost like instead of being ahead of everybody, they're behind and they're catching up because because the growth is slowing. And what do you pay for kind of low double-digit revenue growth, kind of flattish margins? Well, right now it's trading at 22 times 2022 earnings. That's probably still too expensive.
All right, well, talking about what do you pay, Mark, Netflix this morning, and really Netflix this year, significantly cheaper. Is there a buying opportunity here yet, or there's too much weighing on the company to have that view at this point?
Yeah, we don't think it's a buying opportunity. Could you possibly trade it if you're a real adept trader? Could you possibly trade it? Yeah, maybe you might be able to trade. But for an investor, I think there are too many question marks on what's going on here. And again, I know I've said it a couple of times, but the competition is not going away. I mean, Disney is not going away. HBO Max is not going away. And the fight for talent, the fight for writers, and all the creative people are going to continue. So I think that there is if I was an investor who didn't own this, I would say let's step back and wait and look for a better opportunity where management has addressed some of these issues.
Yeah. Mark, I remember some 10 years or so ago, I used to talk to a hedge fund manager who really didn't like Netflix and used to talk about how actually the barriers to entry for other players here were not that high. And he was expecting that other broadcasters would come in and put their content online in some fashion and in a similar way to Netflix and then eat Netflix's lunch. It certainly took a long time for that to happen, but now it really is here. Is there a sense that maybe Netflix just needs to retrench and then everything settles down at perhaps another level? Or does this remain very volatile for some time?
I think it almost has to remain volatile, by the way. Again, because the competition isn't going away. And in many respects, I think that if you're competing against Netflix, you've seen where they're vulnerable. They detailed for us last night where they're vulnerable. If I'm an economic if I'm an economic man running as a CEO of a company, I'm going to say, okay, how can we take advantage of the big gorilla in our business? And how can we hit them at different places to make it more difficult, make it better for us and more difficult for them? So I think we have some of that still ahead of us.
And finally, of course, this is the earnings story we're all following today, Mark, but come the bell this afternoon, we're going to be watching out for Tesla. I know you also have Tesla in your portfolio. What are you looking for?
We certainly, one of the big metrics with Tesla is deliveries, and I think that's it. Certainly, free cash flow is another item. Those two are the things that we're looking most closely at. I will have to say though, although we do own Tesla, we're pretty well underweight Tesla.
And why is that, Mark?
Because we think the business model is a tough business model. We find it hard to value. We think it's very difficult to value, and you have to have a sort of a 10 or 12 year view of this. And the numbers, the valuation just doesn't make sense to us. So because it's so volatile, from a risk control standpoint, we do own some, but we're quite a bit underweight Tesla.